Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is finance and lending expert Mike Susi. Now, Mike serves as the director of lending at Lucrum, where he oversees the firm's private lending operations. Now, Lucrum is a direct provider of short term capital for real estate investment opportunities, specializing in first position debt across a diverse range of asset classes. Now, during his career, Mike has structured financing for a broad spectrum of projects, including residential fix and flips, spec home construction, condo conversions, hospitality ventures, land acquisitions, mobile home parks, small subdivisions, multifamily developments, and multiple other commercial properties. His extensive experience in underwriting has provided him with a keen ability to assess investment opportunities across various real estate sectors. And so, guys, without further ado, I'd like to welcome Mike Susi to the show. Mike, my friend, how you doing today?
Doing great, Kevin. Thank you so much for having me.
Yeah.
I appreciate it.
Excited to have you here. Excited to pull back the curtain, learn a little bit more about you, your business, your expertise, and just what you spend your time on day in day out. And so, with that, Mike, I gave you a little bit of a brief introduction there. Take a few minutes for those that aren't familiar with you, a little bit more of your background, maybe. Tell us a little bit more about yourself, and ultimately how you found your way into the real estate world. And then we'll dive into what it is you're involved in today.
Sure, happy to. Yeah, so I mean, I'll start with the kind of how did I find my way into the real estate world? I was going to college, studying exercise science. I wanted to own gyms at one point. I kind of always had that entrepreneurial bug and side of me, and that's kind of how my brain worked. And wanted to own gyms and started to learn that that's a challenging space to break into, especially with little capital. Um, And so I just started teaching myself about real estate, anything under the sun. It was just kind of learning about and going to YouTube University, as I call it, in school when I was going through college. And ultimately, I graduated, and I made the decision of I can either go and jump into real estate, get some good mentors, start learning about real estate, or I can try to do the whole training thing and study it on the side. And I ultimately just decided to take a leap, got a couple of good mentors and people that could teach me about real estate, and kind of stumbled my way into what most people know as hard money or private money lending. Um, and just started to learn about that space. Had essentially how it worked for me was I had a couple people around me that had access to capital, had access to high net worth individuals who wanted a good return on their money on one side, and they wanted loan opportunities to deploy that money. And so that's where I came into play. Is I was just pounding the pavement looking for good loan opportunities, and ultimately connecting the dots, brokering effectively private money. And that could be anything from a small flip loan to a commercial deal to land to kind of the list that you ran through, Kevin, early on there. And so that's ultimately how I cut my teeth. I ultimately started servicing the portfolios of my investors, and that allowed me to really start to expand my knowledge and learn the business front to back. Because originally it was just kind of at closing, I take my check and I get out. And then it became the ongoing management of the portfolio and learning about that. Fast forward a handful of years, had an opportunity to join up with the guys here at Lucrum to help start the fund and stand up the lending side of our company. Um, and then I was able to kind of really expand upon that knowledge and kind of deploy all the skills and knowledge that I had picked up on over the years to begin to scale a little bit more. And so that's currently, what I'm doing. And then along the way, I'm doing deals of my own as well. The flips, syndicated a couple of multifamily deals along the way. One of which I exited recently, and another one about to hit the market pretty soon here. And so just all things real estate for me. I eat, sleep, and I breathe it, and I love it.
Okay, no, awesome. I appreciate that background there. So curious as to kind of the expertise across all those various asset classes. I ran through a whole list of them, right? Residential fix and flips, spec home construction, condo conversions, raw land, hospitality, mobile home parks, multifamily, right? Like they all have a lot of similarities, but they probably have similar amounts of differences associated with them. So just would love to get a better understanding of how to assess potential risk and reward as relates to these various different asset classes. When you guys are looking at a potential lending opportunity, How do how do you separate, the risk and reward associated with the mobile home park to that of a fix and flip residential project? Again, similar, but still very different worlds.
Yeah. So there's a couple of answers that come to mind there, and that's a fantastic question. I'll rewind to kind of when I was getting started. Um, when I'm getting started, I knew very little about all of those asset classes. And so what I was doing to learn early on, and I still in some ways kind of utilize this kind of tactic, I guess you could now. However, I've really expanded my knowledge. I would lean heavily on my investors to, in many ways, especially at the beginning, educate me and the mentors around me. But example, if I got a deal, I could send it to an investor and I would get a lot of feedback from them. Hey, here's what I need. Here's additionally what I need. Here's why I need it. The most important. Here's why I need it. And very quickly, you start to understand the questions to ask. And for me, it was digging deeper of why am I asking this question?
Mhm.
And so over time, you accumulate this kind of knowledge base. And to the point that you made, a lot of the questions are similar in nature, and the root of why you're asking them may or may not be similar as well. And it applies across many asset classes. And then as you niche down into different asset classes, that's where the nuance comes into play, and that nuance is what's just picked up on through reps, as I'll call them, over time. Of okay, I've looked at X amount of flip deals over the years. I've looked at X amount of just spec home construction deals, and so on. And so that's one way of the assessment of risk comes from good questioning, and then if I don't know the answer to something, having the people around me that do, and supporting myself with the right team.
Gotcha. No, no, I appreciate that. Curious to know what are you guys doing to, there are lots of different hard money lenders out there, lots of different debt funds. I mean, what are you guys doing to really set yourselves apart and, more specifically, create awareness for the product that you offer?
Yeah, another good question. I'd say the biggest thing for us is one thing that I was instilled in me that I felt a true private lender was a good and true private lender early on was if they're truly working directly with you and there's a personal relationship there. So I try to keep that top of mind even as we scale. And so one thing that allows me to do that is most of what we're doing is right here in our backyard. So I'm located in Phoenix, and the vast majority of our portfolio is here in Phoenix. And the reason for that is I feel like what drives my value as a private lender and sets us apart is that relational component and the value that I'm able to bring and drive through my knowledge, being able to connect people within a market because I'm so hyper focused in many ways. I have a pretty deep network. And so if a client of mine or a borrower of mine needs something, there's a good chance that I can connect the dots and
Mhm.
kind of get them connected with the right people. So that's a large part of the value proposition, and what I think sets us apart is the relational aspect.
And how far is the reach? Is it Phoenix Metro? I know that's where you guys are based out of. Is it, the entire state of Arizona, or are you guys across multiple states?
We're across multiple states in that we're in Arizona primarily, and then as I may or may not have mentioned, I came from Maine originally up in the New England
Mhm.
market, and so I know that market well. I'm well networked there, and so we're lending there as well. And then the other markets that we've entered into, going back to the relational aspect, um, we've entered other markets with existing borrowers of ours. So if somebody's doing, I'll give a real example, doing a handful of deals here in Arizona, they also operate in Georgia. We got comfortable with them here in Arizona. We said, hey, assuming we can underwrite properly and put the right things in place, yeah, we're happy to lend in Georgia as well. And so that's how we've entered other markets.
Gotcha. No, that's great. Appreciate that. For those that aren't aware, and honestly, it's been many, many, many years, probably more than a decade since I've actually gone down the path of hard money, and so I have no idea what terms look like nowadays. So just maybe define, uh, maybe back it up even a little bit outside of the terms, but like an example of why a borrower would come to you for your product, than just go to a traditional bank or a regional lender. Just when
Mhm.
are you a fit and when are you not a fit?
Right. Yeah, so I would say to do the comparison to a bank, especially, I'll use the example of a builder. So a builder is, and a builder in many instances is not always, especially somebody that's building, let's say, 2 to 4 houses a year. It's their full-time business, but they don't necessarily maybe run it like a business. They're not as well organized. And so a bank is going to want them to provide every single document under the sun. The difference between me is it's not to say I won't ask for documentation because I'll need something to make us feel comfortable, right? But I won't go down the rabbit holes that the bank will and create the red tape and the hoops for no good reason. Everything I'm asking for is very well justified and really necessary to get a loan done. Um, and so that's one big difference is the ease of transaction and the ease of use. So
Mhm.
another thing is banks oftentimes now especially have large deposit requirements. As an example, it can be restrictive to a builder that wants to be doing, if they're working with a bank and they're required to keep X amount of cash in the bank in the way of deposits, that might be the difference between doing one deal at a time and two or three. The list goes on. And so that's a big kind of standout when you're doing that comparison of us to a bank. Ease of transaction and use.
Got it. And then what would typical hard money terms look like today? And I know that that's a
Yeah.
loaded question because it really depends on the project and the borrower, but just you give us a general range of how it might vary, from LTV or loan to cost to to interest rates to total term of the loan.
Sure. So, and yeah, it is going to vary widely. I'll tell you kind of where we're at, and kind of how we're getting there. It's probably even more useful information. Loan to value, loan to cost. I'm looking heavily at cost, but I'm also taking into consideration value because I think that there needs to be a good balance, right? I'm always going to want skin in the game from the borrower as the lender. Um, and when we're doing a total project, I want a certain amount of that total project cost being, to keep it simply, their purchase price plus whatever their construction or renovation costs. I want a certain percentage of that injected into the deal from them so that they have a real vested interest in making sure that the deal moves forward and it happens. And so that's why you have banks that don't lend 100%. That's why most people don't lend 100%. This is really that aspect. Um, and so there's that component. So to get into loan to value, loan to cost, generally I'll be right around 80, 85% loan to cost on more traditional deals. And then as you get to different asset classes, that will really drastically change quite a bit. If it's land, for instance, you're probably going to be at a much lower loan to value or loan to cost based on, what happens if the market turns and historically, what does that look like? Well, typically land has is going to reduce in value a lot more drastically, perhaps as a percentage. Moving to kind of terms in hard money and private money in this space, it's all short term for the most part. So most of my loans that I'm writing are 6 to 12 months, sometimes 18, 24 if necessary, depending on size of project, length, circumstance. So there's flexibility there, but for all intents and purposes, 6 to maybe 18 months is a good range to use. And then rate, and I'm sure rate and pricing is probably a big one that people are interested in. Um, Very market specific. So I'll give examples of in Arizona, the market is, let's just say right around 12% on the interest rate.
Mhm.
Up in Maine, it's probably a little higher than that, 13, 14%. And that could be tied to how competitive the market is, the nature of the collateral, whether it's rural or not. Most of Maine is rural by definition. Um, and so that deters a lot of investors, making it less competitive.
Got it.
Um, and then the last facet there is oftentimes lenders will charge an origination fee.
Mhm.
And that will range from 1 to 3 to, I know of lenders that charge 5 points.
Wow, 5 points. I guess if you can
Wild.
get it, right?
If you can get it. They're oftentimes in much more rural markets, states that people really don't want to be lending in, and perhaps they're the 100% lenders.
Yeah. Wow. Still, yeah, 5 points. Yeah. And you said what's common is what, a point and a half, 2 points, somewhere in that realm.
Yeah, I would say. Yep.
Yeah. Got it. Got it. Maybe some projects you guys are working on today. Like, what are you excited about? Oh, actually, before we answer that one, just curious as to what the trajectory of the business has looked like for the past, call it 12 to 18 months. Obviously, you've got a lot of volatility in the markets. Transaction volume is down across the board, whether it be commercial or residential. New building, new development has slowed quite a bit. So just curious as to what your business has looked like the last 12 to 18 months. And then, what's the forecast look like for the coming year?
Yeah, so our business has been uh, very strong, and the reason being one of more than one, or one of many. I'd say one of the biggest is because we are essentially, in some ways, you could say, competing with a bank, and so the banking environment has changed quite a bit. And so with that, banks have had become very tight, very and looking for any reason to say no to loans. And as a result, more people that were very bankable and very well qualified to borrow at banks got fed up with it and said, "Hey, what are alternatives? We are those alternatives." And so for the general outlook, that has made our business very popular. And then institutional money has really flowed to this space as well. So you're seeing a lot of hard money type lenders popping up, and really companies that are growing around this business model. Um, and so it's become very popular. More people know that it's a resource to them.
Hmm. Got it. It is. I'm assuming most of your capital coming from just high net worth individuals. Is that where you're raising the funds from?
Yeah, right now, and we're kind of transitioning to an institutional capital as well and introducing that. But for the most part,
Okay.
it's private investor, some family office.
Okay. And what's the average deal size? Like, where's your sandbox? Like, where do you guys like to play?
Yeah, the vast majority are sub a million. So our average loan right now is floating right around 600,000.
Okay. Got it. Got it. Okay. Fantastic. Well, Mike, for those that want to learn more about the firm and the different products that you guys offer, where's the best place to track you down?
Yeah, I'm on LinkedIn, just Michael Susi on LinkedIn. I'm happy to give even my cell phone number. I always welcome texts, calls. I love talking about it. I'm very passionate about real estate, if that's not obvious yet. Um, my phone number is 207-838-5987. I'm always happy to talk to anybody. And then I'm becoming more active on Instagram as it relates to business. And I think my Instagram is Michael Susi 20. Trying to do a little bit more business content and getting encouraged to do so.
Alrighty. Fantastic. Well, Mike, thanks for joining us here today. It's been a pleasure having you.
Thanks so much, Kevin.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.